Hey everyone, welcome back to Corporate Decoder. Today Unit just filed an 8K and I am seeing a significant debt management move. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is looking to trim its debt load using cash from a recent financing. Alright, let's dive into this Uniti Group Inc. A company in the real estate and REIT sector has put out a Form 8. Think of an 8K as a way for companies to report material events that shareholders absolutely need to know about, kind of like a breaking news alert for your stock. The main event happened on the 23rd of July of 2026. Under the Other Events section, the company is sharing some big news about their debt and asset sales. The headline here is about a $500 million term loan prepayment offer and other asset sale offers. This tells us the company is actively working to improve its financial structure. So here is what happened. A subsidiary Kinetic issuer just finished a big private financing deal, raising $1.1 billion by selling secured fiber network notes. This money was used to buy certain assets. This whole deal is called the Kinetic asset sale. Now this is where it gets interesting for us as investors. Uniti Group plans to use some of this cash for growing the business, which is good, but they are also earmarking a significant chunk, $500 million, to pay down their senior secured debt. This is a clear move to reduce their financial obligations. Following up on that, on the 23rd of July, another subsidiary, Uniti Services, sent out a notice they're offering to pay back some of their senior secured term loan that is due in 2032. They plan to pay back as much as about $167.8 million of this loan on the 30th of July. This is called a term loan prepayment offer. And to go along with that prepayment offer, they've also launched what they call asset sale offers. This means they're offering to buy back a substantial amount of their outstanding senior secured notes. Specifically, they're looking to purchase up to about $332.2 million of their 4.750% senior secured notes due in 2028 and their 7.500% senior secured notes due in 2033. They are doing this under rules related to asset sales in the agreements that govern these notes. There is a bit of flexibility built in here. If some of the lenders who are supposed to get paid back on that term loan decide not to take the prepayment, any money that isn't prepaid can be used to increase the amount they offer to buy back those notes. So, if they can't prepay the full $167.8 million, they'll use that leftover money to buy more of the notes. These offers to buy back the notes will end on the 20th of August 2026, unless the company decides to extend them. And as always, at the end of these filings, we have the signatures. This confirms that the company's authorized officers have reviewed and approved this report. The signature here is from Daniel L. Hurd, who holds a key position as Senior Executive Vice President, General Counsel, and Secretary. This shows the company is taking these debt actions seriously and following all the necessary procedures. The report is dated the 23rd of July 2026, aligning with the dates of the announcements. Now, looking at this from a broader perspective, Uniti Group Inc., which has a market cap of about $2.7 billion and has seen its stock price fluctuate between $5.3 and $12.94 recently, is clearly focused on deleveraging. They've raised a substantial amount of money, and now they're using a significant portion of it to pay down debt. This is a strategy that can be very positive for a company, especially when debt levels are a concern. With large institutional holders like Elliott Investment Management LP and BlackRock Inc. heavily invested, it is likely they will welcome these moves to strengthen the balance sheet. The company is described as a REIT, which often uses leverage to grow, but managing that debt effectively is crucial. This filing suggests they are being proactive. The fact that they are offering to buy back notes at face value, or potentially more if the term loan prepayment falls short, shows a commitment to reducing their outstanding debt obligations and potentially improving their financial flexibility for future growth. What I am watching here is the execution. Did they get the full $1.1 billion needed to make these debt payments? And how much of the term loan did they actually prepay? If they can successfully reduce their debt burden, it could lead to lower interest expenses, which flows directly to the bottom line and could support the stock price. It's a strategic move that investors often like to see from companies that have traditionally carried significant debt. This is a strong signal that Uniti is prioritizing financial health and potentially setting itself up for more stable growth. The risk I'm watching is if the cost of this refinancing and debt repayment outweighs the benefits, but given the current interest rate environment and their stated intentions, it appears to be a sensible path to strengthening their financial footing. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.